Welcome back to Yahoo Finance Live, everyone. It's a tough day for cryptocurrencies, but an even tougher day for crypto stocks. We're going to be taking a look at why with our next guest. We want to bring in Emily Parker here, CoinDesk Managing Director of Global Content. Emily, always good to see you. So first off, why are we seeing this difference in how the individual tokens are faring versus some of these crypto exchanges and stocks?
So the answer to the crypto exchanges is fairly straightforward, especially if we're looking at a massive crypto exchange like Coinbase. It all comes down to trade volume. That's really how these crypto exchanges or some of these crypto exchanges make money. They make their money on transaction fees. So trade volume has gone down. Thus, there are less transaction fees to be had. Thus, they are making less money. That's really the most simple explanation. Of course, there's always other things involved, but if you just want to sort of boil it down, it really comes down to that. So, Bitcoin's price could be really high, but if trade volume is dropping, it's not going to really matter in terms of transaction fees.
So then what should we read into this in terms of why we're seeing this low trading volume, and how sustainable do you think it's going to be?
Good question. It's a great point. It's interesting because when Coinbase went public, this was actually kind of a concern that people were saying at the time when looking at the prospects for Coinbase, because it's like, okay, if they rely so heavily on transaction fees, what happens if the market is just kind of boring and trade volume is just not really high? What does that mean for the business? So, look, we've had some really tumultuous moments with Bitcoin over the past few years. It hasn't been as much over the past few months. Bitcoin, Ether, both down from the beginning of the year. So, of course, like anything could change. But I think like the biggest message here is that these exchanges are going to need to diversify their ways of making money, because if they rely heavily on transaction fees, then they are very, very dependent on trade volumes being high.
And something that we saw Coinbase launch today, it's beta testing its NFT Marketplace. What do we know about that so far, and sort of the options that this could open up for a trading platform like Coinbase and perhaps others?
Yeah, this has been anticipated for a while. I think there's like millions of people on the wait list or something crazy like that, which is just indicative of the general froth of the NFT market. Now, Coinbase is taking on a massive player in this space, which is OpenSea, but also Coinbase, does have some real advantages as well. It's kind of like the gateway to mainstream investors. For a lot of people who aren't that comfortable or familiar with crypto, they are relatively comfortable using an exchange like Coinbase. So, you might see some new people entering the NFT market. What's interesting about Coinbase's product is that it appears to have a social media element. Like there's apparently a For You page, kind of like TikTok, and you can sort of follow and like. And I think this is actually, we'll see how it plays out, but I think it's quite savvy because NFTs really are reliant on community and community engagement. Like you could have the coolest NFT in the world, but if you don't have a following and if people don't know about it, and if you don't have a community, that NFT is just not going to sell.
So then to that point, then, as we see Coinbase getting more creative, are there any other platforms or perhaps some of these crypto-related stocks that are also having to be more creative to perhaps get more retail investors in or show that they're more than just how they were when they first launched?
Yeah, I think, look, they're all going to have to get more creative. The exchanges are doing a lot of interesting things. One thing that crypto exchanges are doing, for example, is they're getting into the content business. That's like this kind of relatively new thing where they're starting to actually publish content. I'm not exactly sure what the end game is there, but yeah, they are all, or many of them are trying to diversify just kind of their business, because I think it's clear that you do have to be creative, because not only do you have this problem with transaction fees, you also have centralized exchanges like Coinbase competing against decentralized exchanges, which are extremely different and are also very popular. So, the competition is getting fierce, across the board.
So then, as we've seen, Celsius is another way to get retail investors on board, and that's by offering some high interest rates on people's crypto deposits. But we've already seen that it's running into the same hurdles as its competition with the SEC, with competitor BlockFi. What do people need to know about these platforms, as well as some of the issues that regulators are taking issue with?
I think the bottom line here is that these kind of products are starting to look a lot like securities, or at least U.S. regulators are looking at them like securities. So that's basically, we saw with BlockFi, which had a $100 million settlement with the SEC. Celsius now has kind of really changed its strategy in the U.S., and this is for the U.S. only, in that basically new depositors are not going to get these rewards unless they are accredited investors. So this is a pretty big change. Obviously, this is making some people in the crypto community angry because they don't like the idea of accredited investors getting, different opportunities from ordinary investors. But yeah, I mean, I think there's a very real fear that if they don't do that, they will be violating securities law.
And just very quickly, obviously, there's still a lot of varying definitions about how crypto should be viewed as a currency, as a commodity. How important is that going to be in terms of regulation and expectations there?
I mean, it's critically important, especially when it comes down to securities, right? Like, because we already know that Gary Gensler, definitely seems to see a lot of things as a security. But, one of the biggest problems with the US, with the regulatory environment in the US, is that it's sometimes unclear how you would classify a crypto product as a security. There's not a lot of agreement on that. And that has led to a lot of confusion. And so, you could have crypto projects preemptively leaving the US to avoid getting into the crosshairs of the SEC. So yeah, I mean, I think we are going to start see further clarification on that. But I mean, the question is which way it will fall. I mean, are we going to start seeing more things classified as a security? I think some people believe that Gensler is inclined to feel that way.
And obviously difficult implications to keep an eye on there. We do thank you as always for joining us. Emily Parker there, CoinDesk's Managing Director of Global Content. Thanks so much.